Hi everybody, I hope you've been well. I just thought I'd get in touch, make contact, particularly with the year scooting by so quickly, November already, and with markets having gone through a fairly turbulent time over the last couple of months. I thought it was a good idea to check in and say good day and give you a bit of an update and a bit of a look into our thinking. I should start off as always by saying, of course, that what I'm about to talk about is just general views, general information, our own view of things as it stands at the moment, and isn't specifically for any one in particular or for your circumstances. So as always, to get more specific about this or to more precisely apply it to your circumstances, please, as usual, give me a ring or come along to your next review or make contact in whatever way suits you best. Of course, we've been watching everything pretty closely, and there's been a lot going on all through this year and even going back the last couple of years. We have regular investment committee meetings where we watch geopolitical events around the world, which have been, of course, capturing a lot of the news more recently, and always reviewing the economic impacts, things that are going on and the impact they might then have on financial markets, which of course directly then relates to your own investments here. I guess overall, economically, our view still remains that there's a pretty good chance that a recession's on its way for Australia, maybe a light one, certainly in other parts of the world as well. But what's been interesting is that if you went back a year, you would find that most places would have had fairly high odds on the chances of recession having already happened by now. But what we're seeing is this resilience in the economies around the world for all sorts of different reasons that's is kind of pushing back that onset of recessionary conditions. So things like very strong fundamentals, economic fundamentals in the US, high or tight rather labour markets around the world. These kinds of things are continuing to produce activity numbers that's, like I said, that's pushing back the onset of recession. So I always say as well that even if a recession officially does strike, then it's different for different people. It depends on your own circumstances. It depends on whether you're working or retired and what your income sources are and these kinds of practical everyday things. So regardless of all that, and because of those things, in fact, we're kind of the view now that if a recession does come, and it's particularly after we've had this really quite a heavy correction since July, since the new financial year began in the financial markets, and the fact that it's come off so hard and that the economic conditions are sort of supportive, then we could even see a rally in equities, in share markets, which will be a nice relief after the last few months we've had where, like I said, we've seen markets drop off pretty heavily. 3 to 5 months has probably been the term that in our investment committee meetings we're talking about as being potential for rally, and Christmas brings that in as well, lighter trading, that kind of thing. People are concerned, of course, as well with a lot of the geopolitical problems around the world, the wars, the continuing war in Ukraine, and of course this new horrible conflict that's erupted in the Middle East. Again, that's something that investment managers continue to factor in to their valuations or their predictions for what equity investments might do, equity investments in particular might do. And the upshot of it all, to be maybe a little blunt, I'm not sure, but typically and historically there hasn't, the onset of a new conflict can cause a bit of uncertainty, which is bad for markets. But often it's more a blip than anything else, and they don't have a major direct impact on the share markets. But like I said, after we had really quite a good financial year ending June 30th in the investment markets, as you will have seen on statements and things, particularly in the conditions, it was probably better than expected. But like I said, we've had this correction in the last few months that has really made people sort of sit up and notice. So we're noticing it. Don't worry about that, and factoring it into conversations. And it's really interesting using the Australian market as a measure. It's come off the Australian All Ordinaries Index since 1st of July, so 4 months. So now has come off 5.8%. The US Dow Jones Index has come off 4%. So, you know, that's not small movements in a 4-month period. And if you look sort of across the chart of the Australian All Ordinaries Index, you'll find that where we're at now is effectively where we were at a year and a bit ago, June 2022. And again, it's where we were at in March 2021. And at a similar level again just before the onset of the COVID crash in January, February. The market was at this current level in 2020. So and that fits in with what we've seen, which is this sort of W-shaped sawtooth kind of a performance in share markets, which is reflective of the uncertainty that's there, rather than just a sustained long crash. It's just been this consistent up, down, up, down, up, down, which reflects that uncertainty between buyers and sellers. But look, as we always end up saying, volatility is part of the game, which is why, you know, we have to ensure that allocations to equities and those more volatile assets, regardless of how good a quality they are, they still move up and down. So it's important that that is factored in properly and appropriately in your investments, and that's what we aim to do. And of course, having an understanding of your circumstances, your situation, your needs coming up is really important, and that's why we make those regular offers for review catch-ups. But of course, if anything changes in the meantime, in between those contacts, you're encouraged to get in touch and arrange a phone meeting, a Zoom meeting, a meeting here in the office, so that we can make sure we're on top of as much as we possibly can be. Look, mainly just wanted to get in touch, say good day, and encourage you to make contact if you wish to. I hope you're well. I hope you enjoy the next few weeks in the lead up to Christmas, which is on us in no time, and we'll chat again soon. Take care. Bye-bye.